Hey, and welcome back to another, what do we call this? Q&A session between Mitesh and Akhil. But we like to do these videos. So let me just quickly introduce myself. I'm Akhil, the director at our mortgage broker. We're a specialized mortgage and property finance brokerage here in Bracknell, but supporting clients all over England, Scotland, and Wales. We are joined by Mitesh today, one of the specialist mortgage advisors here at our mortgage broker. Thank you for joining me once again.
Thank you for organizing this event.
No, pleasure. It looks like you've made a good effort there with the attire today, so thank you for that.
Thank you.
Good. So let's get right into it. So as we've called this one, we've called this video "How Lenders Are Adapting to the New Year." You know, every year lenders are doing weird and wonderful things, but I would like to say for the better.
Yeah.
Let's have some questions from your side. Let's have a bit of a conversation around how we think lenders are going to adapt to the changes. And what we think 2023 should look like, and is already starting to move in that direction.
So I guess the first question to ask here really is that there were times at some point early in the year, last year, I was having clients that used to ask me for 5.5 times lending, 6 times lending, because they wanted to sort of, stretch their borrowing capacity for the first home or the moving home. Does that still exist?
I don't think it ever left us, to be honest with you. And the reason why I say that is because we're independent mortgage we're an independent mortgage brokerage, and we are an outlet for all types of mortgages. So I don't think it ever left us. And the reason why it never left us is because we're educated in this industry, because this is what we do for a living, right? So for those that are not in this, is an everyday business, they probably were told 4 times, maybe 4.5 times income.
That's right.
Whereas, yes, that's typically what happens. However, depending on your personal circumstances, income levels, type of property, loan to value, and many other little factors, you can get 5 times, you can get 6 times, you can get 7 times. But there's lots of little nuances that get involved in that space to get to that level of income. So you've probably got more better experiences because you're on the ground, right? Speaking to these clients, speaking to the lenders. Tell me a bit more how you're finding that market in the high income multiple in the arena.
So I'll be honest with you. There was a time where I found it was the back end of last quarter, where this sort of market wasn't really quite there as such. 2 reasons. One was the fact that the interest rates were going up, and the other factor was cost of living. So lenders had to adapt the stress test model in such a way that it was very difficult to try and get 5.5 and 6 times income models, basically, whether it's joint income or not. Whereas what I'm finding now in the new year, and I just had a conversation with a lender a week ago, is that I could sort out a 6-time lending option for you, first-time buyer, home mover, or even a landlord that's not even earning any money and just showing rental income on his tax return, 6 times income, just like that. It could even take me just 10 minutes to sort that deal out on email. And that's refreshing to see. And that's telling me that the lenders are quite keen to lend. The models that they had, which are quite restrictive, has slightly relaxed. And also there are quite a few lenders out there that still do the 5.5 times multipliers, and that's regularly advertised on the websites for all clients. And some of the lenders that do 6 times are quite exclusive to certain brokerage like us and whoever has access to this type of lenders. But it's good to see that level of confidence is there in the market.
Well, listen, thank you for sharing that. And it goes back down to who you're taking the advice from. And I think we've done a video previously to this one, is actually working with the right brokerage and the right advisor that understands affordability. And you're right, Q4 saw affordability go up. Our gas prices were out of this roof. I'm asking my kids to wear extra 5 pairs of clothes so you don't need to put heating on, but that's another story. And that's only a joke, by the way. So on a serious note, yes, affordability did go up. Lenders need to be certain how they lend responsibly. That's fundamentally the key for the FCA principles. And that's doing the right thing. But what we are finding is, depending on, as I said earlier, is about your income levels, the affordability, they can stretch to 6 and 7 times. So it's a breath of fresh air that those lenders maybe dipped out of the market for a couple of months, but they are there in the background. And again, all I would say is, for anybody that thinks that they can't get the relevant size of mortgages, you truly won't know until you speak to the likes of Mitesh, because you just don't know. I just can't. So all I would say is, I would love to leave it there and just on that point is just get in touch, because you just don't know. If you don't ask, you don't try, you're not there, whatever it be, you won't know. So all I say is pick up the phone, call him on a Sunday or on a Monday, whatever you want, just call him, okay? And there are other advisors available as well. But again, if you don't ask, you don't get. If you don't know, how do you know, right?
That's true.
That's how I'd leave it.
Very good.
Next question.
Okay, so next question is all around buy-to-lets.
Buy-to-lets, yeah, we love buy-to-lets.
So my question is, the criteria changes compared to last year. What have you seen?
Loads.
Right.
First of all, let me quickly ask you a question back. Is
Yeah.
buy-to-let dead, or is it still alive?
Oh, you know what? I just had a phone call half an hour ago from
Yeah.
a client, and that's exactly what he said to me. He said to me, "Is it dead?"
Yeah.
And I said to him, "No. Didn't you know rents have gone down?"
Yeah.
Literally a few days ago. In fact, today we've had a lender that's dropped the rates.
Yeah.
You know, below 5%. They're in the early 4s.
Yeah.
Buy-to-lets.
And you know when I have these calls with clients all the time, right? It's buy-to-let dead. And I'm thinking, I'm not, last time I checked, buy-to-let is not human. Buy-to-let can't die. It's a property.
Right.
And if you think, on a serious note, if you think buy-to-let is dead, it's dead. But it's how you keep it alive and keep it prosperous and cash flow positive is how you're going to make a business out of it. And it goes back to that. Buy-to-let is a business product. And you've got to move with time. You've got to adapt to changes in the economy, adapt to types of tenancies. And like us personally, we've got to adapt to changes in our lifestyles, right? So again, with property, you need to adapt. And what worked yesterday is not necessarily going to work for the foreseeable future. So you've got to remain on beat, on pulse, and speaking to the right people. So from my perspective, buy-to-let is certainly not dead. It's still an impressive asset class to invest into. I don't believe everyone should put every single pound into buy-to-let. They need to have a diverse portfolio. But again, I still think if you look at house prices, typically they're only going in one direction. And property's is one of those asset classes where it grows over a period of time. That doesn't mean you buy on a Monday, you can sell on a Wednesday for profit. It does happen. We've seen it in numerous transactions. But again, it's a sort of 3 to 10 year cycle, and there's value add. And what I would say about buy-to-let is, if somebody wants to buy buy-to-let property, buy it for income. Don't buy it for capital growth, because it helps generate income for you, which then helps with your lifestyle, for other costs, for example, and then you can recycle that money into buying further property. What's your thoughts?
No, you're right. In fact, what I'm seeing is clients are being more savvy.
Yeah.
So rather than looking at leasehold flats or a 2-bedroom house, they're thinking, maybe let's explore a multi-unit freehold block. Let's explore a semi-commercial proposition. Or even, you know what, let's look at a conversion from a commercial to residential properties. And that's what I'm seeing. It's amazing where clients are looking at yields and growth, looking all that into consideration, saying, you know what, despite the way the rates are, although it feels higher because I'm looking at my existing rate, it's 3 point something, you're now saying 4.5%, 5-ish%, still a huge increase compared to what I'm paying. But if I then put those figures into what I'm buying, and I'm looking at the yields and the growth, it's actually looking pretty attractive. And I'm also finding some of my clients have done a lot of bridging transactions in the last 3 months because I bought something cheap at auction, or they've found something that's been an empty, commercial, semi-commercial unit, and they've gone in and the bridge fund secure it quite quickly, and they know there's going to be money at the back end of it towards the, let's say, later part of this year once everything's done up. So I'm seeing a lot of that at the moment.
And again, you make money on the day that you buy the property, right? So the best chance of you making profit on day one is buying it at a good value. And then to double it, or make it a win-win, is find ways of adding value to that property immediately, converting, extending, refurbing, and the like, extending the lease, for example, if it is a leasehold apartment. These are quick value add opportunities. And again, that's what we do as advisors, right? We help our clients prosper in the property investment journey, and finding other alternative ways of adding value to properties. It's not just one size fits all. So again, if anybody's watching this video, they want real life examples of how to get in touch with us, and let's have that conversation. Let's start thinking outside the box, because there's so many ways of what they call it, skinning a cat. Next question.
Okay, so this is an interesting one. So I've got a question here that says, high arrangement fees compared to low arrangement fees.
Yes.
I'm seeing this new trend in the market. A bit like the trend, as you can see.
Yeah, the gilet.
So any comments on that?
I can't control arrangement fees,
Yeah.
and we tell our clients we can't control arrangement fees. Yes, they are higher than they were 10 years ago. Sometimes they're higher than they were last week. It is what it is. Now, in a high interest rate market, lenders need to reduce interest rates, especially in a buy-to-let space, and for affordability stress testing, they need to increase the arrangement fee. And yes, they are extremely eye-watering at the moment. We've got prime vanilla high street lenders, and you're seeing this on first hand, that are charging 5% arrangement fees.
That's right.
And they actually say in return, well, we can add that to the loan. And I'm like, excuse me, you're charging 4 or 5% interest rate for 5-year fix, and then you want to charge our client another 5% arrangement fee, which you're happy to add on, but my client needs to pay for that. It has to be paid by the client. At the end of the day, it is what it is. So as buy-to-let investors, as entrepreneurs, we've got to find ways that we can recoup that 5%. How are we going to recoup it? Is charge market rent, add value to property, so you can get the value add and the market values, and you can charge higher rents. And in turn, you can also have tenants that are there for a longer period of time, so you don't have any longer void periods. So there's lots of ways of recouping that money, and I appreciate, yes, 3%, 4%, even 5% now is eye-watering. It's like, that's too high. It's buy-to-let dead. And I understand why people have that mindset, like, oh, they're charging this. Do they want to scrap buy-to-let space? Well, no, it's definitely not true. We've got a shortage of housing. Employment is still very low, but income versus average house price is still 10 times. Unfortunately, we can't get you someone a 10 times mortgage. So there's lots of levers that we can pull. But again, I think it's more about advice. What are you telling your clients at the moment?
So the reason I brought the question up is because if I was on the other end of the conversation, and I'm a landlord, and you're my advisor, and I'm just thinking logically, just like brought the question up, is it would be a shock to the system. I've got a portfolio of properties here, and I'm looking at my rates. And I would have said to myself, hang on a second, I've paid 19995 product fees on this, 1%, 1.5, okay, max 2. You're saying to me 5.
You're going to fall off your seat.
Should I be talking to another broker?
Well, you're more than welcome to, but I like to think that I'm the most trusted, and I'm providing you with transparent, impartial advice, and we're doing the best by you. But again, what I would say is, don't just look at headline rates, don't look at interest rate, and don't just look at arrangement fees. Because what you guys do, and all the advisors do, is look at the actual true cost of borrowing those funds for a 5-year period or a 2-year period. And that's really where you see what exactly is coming out of the direct debit on the first of each month. So sometimes you might find the higher interest rate is actually more cost effective over the term rather than the actual cheapest interest rate.
Depending on the loan size.
Depending on the loan size, and also the other fees, because some lenders might do free legal fees, free valuation, might do a cashback. So there's lots of weird and wacky ways of looking at it. And what I would say to anybody that's watching this, don't get
just hung up.
Don't get hung up on the interest rate. I think that's the right word to use. Good word, by the way. We don't want to hang up on our clients, and if the clients don't hang up on us, but don't get hung up on the advice that we give. But look at the cost of borrowing over that period of time, and find ways. Well, you know what? I haven't increased rent for the last 3 years. Well, are you shooting yourself in the foot? How much have you actually lost there? If you charge market rent, we're able to get you this much capital raise rather than this much, because the lender will look on market rent.
Even £100 increment makes a big difference.
There you go. That's a few coffees there as well. So, it goes down to advice. Don't get hung up. Don't get shell-shocked. Understand the nitty-gritty in between all the lines, and actually work backwards and defragment the mortgage, the costs, and work with the likes of yourselves who are willing to put in that time and effort and work together. Excellent.
Well, my next question, I guess, is in line with kind of what's happening in the market and where we were at with the cost of living and disposable income being squeezed.
Like orange.
Like orange. So I guess my next question is, do you feel there'll be a demand more for debt consolidation and remortgage options for clients where maybe they're looking at consolidating unsecured debts and keeping their payments low every month?
Well, I'm going to keep my answer quite short because you're in the trenches, you're seeing this day in, day out. What I would say is debt consolidation is there's two different types of debt, I would say. There's good debt and there's bad debt. And the way I defragment that and I understand what's good and bad is basically looking at what the cost of borrowing those funds are.
Yeah.
And what am I using those funds to? So if
Yeah.
I think if I repay a personal loan,
yeah,
that's fine.
Yeah.
I don't have that monthly commitment. But if I didn't, where can I use those funds and where can I place them for a higher return on my investment?
Yeah.
You know, it's like anything. You've got to think like an entrepreneur. You've got to think like a businessman, and you've got to think, where does your money work harder for you? You know, so you've got to put your money to work. You know, don't let time use you. You use time. And it's the same principle with money. You've got to make your money go further away. Now, we know inflation is at 10, 20, 50%, whatever you want to call it. But you can manage your own inflationary pressures within your own, confined in your own home, and work smart. And I always say is take advice from family, friends, people that are actually doing doing what you're trying to do or you're prospering to, and work with your advisors. You know, contact your advisor here at OMB and ask, what are your clients doing? What are you seeing trends wise? You know what, we can raise this much capital on my buy-to-let or my personal home. It'll repay my credit card, my car loan, all that. Is it money well spent? It might well be for one client, it might not well be for the other. But again, it has to be done on an individual basis. So I'll leave it to that. You tell me, what's your take on debt consolidation?
So you know that I love compliance.
Yes, you do.
So
I know we do, genuinely do.
And so straight away, somebody says to me debt consolidation.
Yeah.
I'm always thinking, you know, in terms of different hats, this is what I need to say to the client.
Yes.
And you're right. Every situation is very different.
Yeah.
If you're really struggling, if you're going to about to default on a mortgage or one of your unsecured payments, it could be a last resort. You know what? It might be the answer.
Yeah.
Again, you need to do a fact find properly. But at the same time, you need to understand the risks involved.
Yeah.
Going from an unsecured debt to a secured debt.
I love it. Yeah.
The amount of interest you're going to pay over a longer term of the mortgage.
Yes.
So I may come across very old-fashioned.
Old is gold, my man. Old is gold.
But I would say that those things also, you know, are quite important to understand. If you are one of those clients that is really eager and hungry to raise that cash and have more disposable income so that you can then reinvest in your next property journey, then you know what, it might not be a bad shot, because you might get something there which is, you know, really a bargain and you don't want to go for it. So, you know, the best thing for you would be to maybe concentrate, raise extra cash, consider the whole unsecured debts, remortgage, and so on, so that you get extra cash then to put towards your new venture.
Yeah.
So I'm seeing those sort of scenarios as well.
Okay.
There isn't a right or wrong answer as such, but it is down to the client in the day to make that call.
Yeah.
It is a possibility based on what you want to do, but you also then need to understand that there's a difference between having the unsecured and secured, and kind of the fact that we always say to clients, your home may be repossessed.
Yes, you do not keep up repayments.
So that plays a very, very big part in terms of understanding debt consolidation.
Yeah, it does. And anybody that's watching this and is thinking about consolidating debts into one loan and so on, just can you all rewind 90 seconds and just listen to exactly what Mitesh said, because there's nothing from my side to add other than be proactive rather than reactive. If you think something's coming up or you're unsure, you know, plan well in advance. Whether you're employed or self-employed, start speaking to the relevant people sooner rather than later. That gives you a chance. It buys you time. So yeah, no, fantastic.
I guess my next question is leading on from this, and it's all about second charge loans.
Second charges, yes.
And also certain new lenders and criteria like flexibility with drawdown options and things I'm hearing, you know, in terms of products out there in the market, which is looking very attractive for certain types of investors, I guess. Your thoughts and views on that?
Well, the beauty is that banks and lenders are doing innovative stuff. They're always creating good products that are going to work for the foreseeable future, and they can see things coming into fruition in a short period of time, hence why they bring it out. But more importantly, they're always asking the likes of us for feedback to say, we're offering this product set, this product range. How can we enhance our products? What are your clients screaming out for? What can we be doing more of? What should we be doing less of? And that's a conversation probably you guys are having more than I. But again, they're asking for education as well. Think of the lender as a client, as an advisor. They're always asking for feedback. How can they improve?
Right.
And we always say, be a bit quicker. And that's one of our first feedback we give to everyone. But other than the being smart and being quicker, is being more innovative on product styles. Thinking about how you can help and guide that client sooner rather than later. Thinking more commercially. You know, we talked about earlier, old school is the best school. You know, old is gold. And I'm a big believer of common sense lending, and I appreciate it's all about lending responsibly, and I totally get that. But again, in today's market where interest rates are high, affordability is being a bit squeezed with inflation and everything else. It seems like it's piping down a tad. Hopefully that continues. But again, lenders are in the space of lending. If they don't lend, they don't make a profit. They don't make a profit, they'll be sleeping at home. Right. So it's in everyone's interest that we work collectively. So you know, first charge mortgages, cheapest, most cost effective, and everyone should have it if you're buying a home. Second charge mortgages are not a bad thing. You know, some people might think, oh, I've got 2 mortgages on my home, well, and I'm paying 3%, I'm paying a 6%. Well, is that really cost effective? Well, look at it from a blended approach. What's my average rate combined? Is it a short-term fix? Or if I'm raising capital and it's costing me 6%, but I'm buying a property at auction and I'm going to convert it and make a 15% profit, well, that 6% against 15 profit is not a bad return on investment. And it goes back to probably one of the other questions that we talked about is make your money work for you harder. Don't let the money work for you, and so on. So it's all about working smart. And if you've got whether you've got your home owner occupier hat on or you've got your buy to let hat on, you still got to think as an entrepreneur. You still got to think as a businessman, because it's your hard work that you've put in blood, sweat, and tears, and loads of hours at the offices or wherever it be, and you want to do the best for your money and hopefully meet and exceed any aspirations that you may have personally or as part of your family. What's your take? Are you seeing a lot of second charges at the moment, or other types of products that you're advising on?
You know what? I am seeing clients open to the idea, which is refreshing to see.
Yeah.
The reason being is that they weren't aware of the concept in the first place. But because there's so much flexibility around the different product types and features, clients are thinking, you know what, that could help me in the short term. And then when my deal comes up for renewal, I can consolidate my first charge and the second charge and then do a remortgage out.
Yes.
So to give a classic example, a lot of people I'm seeing now are planning for the next 6-9 months, maybe to buy something.
Yeah.
If you're stuck on your current deal on the residential property, there's 60% equity in the property.
Yeah.
You don't want to pay the 4% penalty, and the maths doesn't add up.
Yeah.
And you're thinking, I earn 100,000 a year.
Yeah.
I've got a 100 grand mortgage.
Yeah.
I've got 60% equity in my property. I really need the 100 grand. How am I going to get that? Because I know I can get a bargain. I could be a cash buyer, and I could go to auction and buy something, then add value to it. But you know, how do I raise that cash without paying so much penalty?
Yeah.
I mean, it's a hypothetical example with the numbers I've given you. But as a concept, if I said to you, hang on a second, I can give you a second charge option with a drawdown facility.
Yeah.
So that if the funds are ready, and then whenever you see something for the next 6, 9, 12 months, all you need to do is click a button and the funds just draws down.
Right.
You know, as a concept, it's amazing. Rather than having all the stress and pressure at the time of now bidding an auction, I need the cash, help me out quickly. What are we going to do? Why is this taking so long with the solicitors? Which is kind of what tends to happen, you know, on a normal transaction.
No, that's really good that you touched on it. So what is, you're being proactive. You've got the right advisor that's got a product, a facility where you can pull those levers as in when you want. So if you find a property at auction, it was a last minute, and you know what, I really like it. If you came to me and said, I need auction file, you can't make it happen like that. However, what you can do in that example is you've got the facility pre-arranged. It's just a matter of a couple of phone calls and the funds are there in your account, and you can complete seamlessly and perhaps negotiate a better deal because you're in quicker than I am.
Exactly.
So no, I love it. And I think that's the key, you know, again, speaking to an independent brokerage, understanding there are many types of mortgages out there, but if you only know what you know, right?
Exactly.
But again, you need to be around others that know more than you, and it's just generally in life. So the more you're around that sort of circle, and we're privileged, we're in a privileged position where we are, because usually the finance cost, your biggest debit in your bank statement is usually your mortgage payment, right? Unless you drive a Ferrari like Mitesh. But
I wish.
To be confirmed.
Because
So yeah, things are like as well. But again, it's about proactiveness.
Yeah.
It's doing the right thing, speaking to the right people. And I always say there's no such thing as a silly question.
Yeah.
Because if you're thinking about it, somebody else probably is.
Exactly.
And if you don't ask, then you're just going to remain in the dark, and somebody else will just take that opportunity and be like, "Oh, I already thought of that,"
and take over you.
and take over in the fast lane in that red Ferrari. Is it a red Ferrari or black or blue?
Maybe yellow.
Oh, yellow. I might go blue to meet the OMB colors. But Ferrari has to be red. I think Ferrari must be red. Unless you're going to buy 3.
Oh, there's not a Ferrari.
It's not a Ferrari. No, I agree. I agree. Do you have any more questions?
One last one.
Okay.
And then maybe we can talk about growth plans for OMB coming the year.
Yeah.
So one last question around the certain types of lenders that offer large loans and bespoke services in terms of bespoke rates, bespoke underwriting, direct connection with an underwriter where you can just pick the phone up, send an email with a few attachments, and they'll come around and say yes or no. Because hypothetically, let's say you're looking for a £1.5 million mortgage.
Yeah.
Are you seeing those type of lenders in the market?
Yeah. So first and foremost, we've got many clients that are looking for those types of facilities. Without the client, there's no point in having lenders, right? So the beauty about our business is we help clients whether they're first-time buyers or they want to buy that trophy home, if you like, right? So we're very well positioned and versed in that category. So we have no problems there for whatsoever. The other side of it is having access to the right lenders that can adapt and provide facilities or provide those types of high net worth mortgages to individuals. And the way that those lenders are in the space, it's only a small pool of lenders.
Yes.
But what they do is they have that, what you call it, is a bespoke, that niche product range for certain clientele. Now, a lot of our clients are in the self-employed business. They're self-employed entrepreneurs, got their own businesses. So they've got various incomes, albeit through their business or other investment vehicles as well. So some years might look great on paper, some may not. But again, not every client needs to extrapolate all cash from their company. They might want to keep those funds in the company simply because they don't want to pay double taxation through corporation tax and income tax. So there's many ways of the way they work. Now, again, our clients are well versed in their own businesses. So they're very successful in what they do. So the lenders that we work with understand how those types of clients work and how to then look into their background, either portfolios, investment vehicles, other assets in the background, or just simply their trading business and other company accounts. And for those that don't know, it's not just about your salary, what you earn, and an income multiple. There's various ways that lenders can look at people's business accounts, looking at profits before tax, profits after tax, looking at dividends, looking at management accounts going forward. So there's lots of various ways that lenders can look at that space, and the criteria becomes more and more bespoke, very much tailored to the individual, I would say.
Right.
And the beauty about going to private lenders in that corporate bespoke space is they can be flexible in their approach. And with the contacts that we've got and the relationships we've got, there's more common sense lending. There's a common sense approach. And what happens there is we can then deliver on what the client ideally wants. If not, we're able to shake things up, tweak a few things, and it might mean the client needs to do A, B, and C, come back and see us in 2 months, 3 months, 9 months, and then we can revisit it.
Or just after this is the bonus in March.
And they might receive a bonus each March. So tell us, what are you finding in that space?
I'm finding that exactly. I'm finding where underwriters are being very, very helpful. Clients are about to receive a large bonus payment in March, just before the next financial tax year begins. And they're looking for larger size mortgages. And I'm finding lenders are very much in that space of lending, about 5 times income, quite comfortably, despite the larger loan size. And also at the same time, very flexible in the approach on affordability, like you said. Some lenders might even take a bit of their retained profits in the business, if you're 100% shareholder director of the business. So many nice things to hear from lenders. And the fact that you're actually speaking with that senior underwriter that's able to sort of make the decision there and then for you, or down and say, look, for today, it's X amount. If you're telling me that's what's going to come in, this is the amount that it could potentially go up to. And that you get that on email. And so it's really nice to sort of be able to help those clients, because you're going in with that confidence, with that certainty, knowing that the underwriter has already pre-approved something.
Yeah.
All you then have to do is wait for those documents to come in, as long as it's got the right numbers that you had agreed before with the underwriter, or it shows those numbers on the pay slips as the client has told you.
Yeah.
Then it's almost a done deal. So it's really refreshing to see.
No, it's good, and I think more and more lenders are trying to enter that space.
Yeah.
There's lenders that are already in that space, and there are go-to people that we go to there. But again, if any of our clients are watching this and they're thinking, well, I want to buy that trophy home, I'm self-employed, we've had either a good 2 years during the pandemic or not, get in touch with us. Let's start having those conversations, understanding more about your background, where you are as a company, where you want to be. And even if you've got foreign income, you're a foreign investor, want to buy in the UK, even if you're not getting your income in pounds sterling, it could be US dollars, it could be Swiss francs, it could be euros. Again, let's have that conversation, because they're so open to those sort of avenues of different various income streams. So, anybody's got any questions, get in touch with Mitesh and our mortgage broker, and let's start that dialogue early. And I think that's pivotal. In every year, we always say to our clients, keep the dialogue open, because you just don't know what's around the corner. We get surprised every day with what lenders are doing. Good and bad stuff, but we need to be conscious that not every day is a Sunday, not every day is a great day. So we're just going to be mindful of all that. But again, we remain educated, we remain impartial, we're always willing to learn. But it's just finding ways of adapting and changing the way we work to help our clients grow.
Excellent. I guess just want to finish off by saying, any immediate plans or future plans for OMB? I hear there's a trip planned somewhere in Dubai.
Yes. So as we record this is Friday the 3rd of February. So yes, we're traveling to Dubai next week. We're going out there to meet some of our existing clients that are either expats or local nationals in Dubai. So we're going to go and meet those. We haven't met some of them face to face. We're also looking to expand our services to local residents and expats to provide them more education around how the UK market is evolving in terms of the buying and selling process. And there's some other things that we're looking to do out there as well. Network and partner up with local property professionals, accountants, tax advisors, and even local estate agents there that are looking to sell property here in the UK as well as there. So what we're trying to do is expand and push ourselves to the next horizon. And we're doing that, thanks to yourself and other team members. We're looking to, push ourselves, because what we want to do is we're like our clients, right? We're always trying to learn and how we can pivot in these amazing times. And if we don't do it, then we're not pushing ourselves more and more out. Locally, what we're doing a couple of exhibitions this year in February. We're going to be at the Asiana Brider Show. So we're meeting brides and grooms, people that are looking to get married in the next year or so. They're probably going to be with their family and friends. And at the moment, it's all about mortgages and interest rates. So we're going to be on hand. You guys are going to be on hand to provide clients with information, exchange contact details, and then start those conversations going. We're also in March going to be at the National Investment Show, which is at the Old Billingsgate in London. It's, I believe, one of the largest property networking events in the UK. So OMB are going to be there. You guys are going to be on hand to answer investors' questions or home buyer questions. So if anybody wants to visit and meet the likes of Mitesh and the rest of the team, feel free to pop down on March the 14th at the Old Billingsgate. What else is happening? Well, the first half of the year is really, really busy. Our mortgage broker won an award in January, the most innovative broker in London and Home County. So, thank you to you and the rest of the team for helping achieving that award. We're also up for the best buy-to-let broker of the year by Business Money Facts. There's a large award show, which is happening in April. Fingers crossed we come back with the award, but even if we don't, in our minds, we're still winners anyway. We're doing the best things for our clients. We're enjoying what we're doing. We're having fun. And clients keep coming back to us, and that shows that we're doing the right thing. But we don't like to get too carried away. It's all about learning, pivoting, and always trying to learn. So hopefully that's been insightful. But again, if anybody's watching this video, well, you are obviously clearly are watching this video. Anybody's got any questions, drop them below. Call Mitesh, call the team at our mortgage broker. We'd be delighted to assist you with any question, whether you're buying your first home, moving home, buying your next buy-to-let. We hopefully have got an answer and a solution for you. So get in touch. All our contact details will be in the show notes below, and we look forward to hearing from you. Until then, thank you so much, Mitesh.
Thank you.
Pleasure.